Hi guys, how are you doing? So, yesterday on Thursday, as per expectation, there was a great amount of volatility which we saw, and we would be discussing the previous day of the Thursday, which we discussed already, and see the after effects of how the things actually happened and what we were actually expecting. But moving on towards the Friday, that is 20th, we can see there's a Yen's data that would be coming for the housing start yearly, and then we have some euro data that is coming out specifically on the Germans retail sales and their import prices monthly. On the other hand, we have the pound data that is coming out, and after that, on the euro, we do have the German CPI coming out. That is the red high volatility impact. Then we have Swiss retail sales coming out for the Swiss, and also we have French data of the consumer spending, French final private payroll data, and French CPI coming out, and a lot of activity in euro specifically. Then we have economic barometer for Swiss that is coming out right here, and then we have German's unemployment rate, then Italian CPI, preliminary CPI is coming out, and then we have like a Canadian dollar GDP coming out there. So we would be discussing that as well. Then we have United States course PCE index coming out, really important data that is coming out tomorrow, and then a good trade balance, personal income, personal spending, and wholesale inventory, and then Chicago PMI coming out. And at the end, we do have FOMC member speaks. So let's deep dive into this understanding of the data, that how things are. And it's a lot of data that is coming out. Housing start is actually the change in the number of new residential buildings that being constructed. So it is a leading indicator of the economic health because the building construction proceeds produces a wide range of reaching ripple effect. For example, jobs are constructed for the credit for the construction workers, subcontractors, inspectors are hired, and various construction activities in purchased buildings. So it is actually the it shows the strength for the economy in the sense of like inflation, because uh, each of the time the big projects are being done, investors are bringing money, but on the other hand, if it's done by the government, it also produces the money printing side on the monetary effect. So we can see that it is a important indicator, and actually the greater than forecast is good. So we can see that from the minus 2.5 to minus, it is going to the minus 2.6%. So it seems like it is decreasing. On the other hand, we have an import prices, that change in the prices of imported goods purchased domestically. So it contributes to the inflation for the businesses and consumers, especially those who rely heavily on the imported goods. So it deals with actually the import prices. Then retail sales is the total change in the total value of the inflation adjusted sales. Guys, just give me a minute. Sorry, guys. I had a a call from somebody. So the change in the total value of inflation adjusted sales at a retail level. So so it is basically the change in the value of the sales, and actually good is forecast better uh, for the currency, and it is a primary gauge for consumer spending and account for the majority of the economic health. And then there is a MPC member speaks for the pound. That is due to the speaks of this monetary policy in the world of the geopolitical fragmentations. So it is the governor deputy that would be speaking. More hawkish expected is good for the currency. It depends upon the tone of the member who speaks. So the members vote on where to set the nation's key interest rates and their public engagement. And then we have nationwide HPI, the change in the selling prices of homes with the mortgages backed by the nationwide. So it seems to be more important data on the macro level because it shows the homes with mortgage backed on the nationwide, and it is uh, this is the UK's second earliest report on the housing inflation, and it is a leading indicator for the housing industry health because of the rising house prices to attract investors. So it is dealing with that the if the prices of the house is rise, so it attracts the investors. But this data is actually dealing with the selling prices of homes and mortgage. So seems like it's gonna be better on that side. And then we have CPI. That is a consumer change in the price of goods and services purchased by the consumers. So it actually is the account for the majority of inflation, and inflation is an important to the currency valuation because it rises prices leads to central bank to raise the rates. So uh, currently the CPI for the Germany is getting from negative to positive, and really important data actually that is coming out specifically, and it's like kind of like not exact when the data would be coming out, but most probably it would be coming around this time because you see it's aligning with this, that is retail sales is coming. So CPI would be coming exactly around by the same time, and then we have like Swiss retail sales that is coming, the change in the value of the inflation adjusted sales at retail level. So it's the same thing that is of this Germany that will be coming. Then consumer spending is the change in the inflation adjusted of value of the good expenditures by the consumers. So it is coming, and we can see actually that the French consumer spending is decreasing a lot. So it's kind of like bit of an alarming situation out here. It's like going from positive 0.7 to minus 0.6. So it's a big difference that is which basically we can expect. And then we have final payroll, private payroll, that is a change in the number of employed people excluding the farming and uh, government. So it is basically an employment rate, but they use it as a different name. So revised employment, see right here, or non-farm employment, that is the biggest data that is coming. So we can see that a change in number of people employed, and the previous listed actually listed in actual and preliminary. Therefore, the history data will appear unconnected, and there are two versions of the indicator that represents final and preliminary, right? And then we have the CPI coming, and then GDP, that is the gross domestic product, that shows a change in the inflation just of value of goods and services produced by the economy. So we can see that it's although it's quite down, and it still would be coming bad. So this is what we actually can see. Then we have yeah, unemployment change specifically coming. So unemployment changes change the number of people of unemployed during the previous month, and it is a lagging indicator. Although the number of, just a sec, guys. Just a sec, guys. So it is changing the number of unemployed people during the previous month. So it shows the number of unemployed people as an important signal for the economic health, and we do have an Italian preliminary CPI coming, and then GDP for the Canadian dollar coming, then PCE index. Just a sec, guys. So we do have like PCE index coming. That is really important data, guys. And along with the CPI, this PCE is actually dealing with the basic level of the community, because CPIs are dealing with the services industries and manufacturing industries. So the change in the prices of goods and services purchased by consumers. So it is dealing with directly with the consumers. So goods and services purchased by the consumer that differ from, see now from this FF notes we can see right here, it's like saying differs from the core CPI is in that it only measures goods and services targeted towards the consumers, to target towards and consumed by the individuals. Price are weighted according to the total expenditure per item, which gives important insight to the consumer spending and behavior. So PCE basically measures the goods and services target towards the consumers by individuals. So this is what I was telling you, that it deals with the individuals, and prices are weighted according to the total expenditure per item, which gives an important insight into the consumer spending behavior. CPI is released uh, about 10 days earlier and then tend to garner most of the attention. It is a Federal Reserve primary inflation measure, and it is a primary inflation measure just like CPI. So you need to remember that inflation is an important to the currency valuation, because of the rising prices lead to the central banks to actually cut off the rates. So it's a different indicator, but really on the basic level. So so data isn't like much being on changed, and then we have good trade balance. It actually deals with the import and exports, difference in the value of imported and exported goods during the reported month. So actual is greater than forecast. Is good for the currencies. So the trade in goods make up uh, about 70% of the total trade, and therefore provides an early insight into the trade balance. Data reported about 5 days later, a positive number indicates more goods were exported than imported. Right, and export demand and currency demands are directly linked, because foreigners must buy the domestic currency to pay for the uh, nation's export. So it is really important that whenever the export demands and currency demands are linked, like in a sense that when a foreign country, if foreign country is buying the products that are produced and that are exported, so they buy the domestic currency to pay the nation's exports. So then they pay in the the in the value of the currency of this exporting currency. So export demands also impact the production and domestic manufacturing. So it also deals with the production and then personal income that is coming for United States. The change in the value of value of the income received from all the sources by consumers. The income is correlated with spending. So the more disposable income consumer have, more likely they would increase the spending. So higher the income, higher the spending, and we can see that this trade balance is actually decreasing right here. So no, sorry, it is increasing because it's in minus, right? So it is increasing, and seems like that can boost the dollar up, the trade balance. And the personal income is the income received from all the sources of consumers. So it's the total income, and it's around about the same. Personal spending is the change in the inflation adjusted value of all expenditures by consumers. So it's the expenditures which are done by the consumers, and you can see that this is a significant data through. It tends to have a relatively mild impact because retail sales, which cover the consumer spending, is released 2 weeks earlier. The consumer spending accounts for the majority of overall economic health, and it also gauges for the ripple effect for the consumer buying create an economy. So it's on the personal level, and then wholesale inventory is the change in the value of the goods held in the inventory by the wholesalers. So it is the change in the value of the goods held by in inventory by the wholesalers. So for example, wholesalers are holding an inventory, so the change in their value is really good. So it is also released in the preliminary and final, and it signals the future business spending because companies are more likely to purchase goods once they have depleted inventories. So the thing is that if the value of the goods is being changed significantly, it would be bad for the business. So in that case, actually less is better than forecast. So it means that it would be it would be coming on the bad side because it has to be less. And then PMI is an basically a data survey around 200 people purchasing the managers in Chicago. Managers that ask for the respondent about the employment, production, new orders, prices, and supplies and delivery. So it's basically a data that is coming out, and then it speaks of Federal Reserve Chicago president bank, and it is actually the tone that it matters in there. So guys, we've discussed all this data in really deep right now, and it is a good information to understand the fundamentals. So by the way, this housing start has came, and that is like a change in number of new residential buildings that began construction, and you can see that really less amount of buildings started created construction in there. And if we see that data has decreased significantly in that manner, and let's see now, jumping into the charts directly in front of you right now, and let's see how specifically things are looking. So right here we have DXY. Let's start from here, and you can see right here that DXY has given us a good breakout around this point, and this was basically a range that was developing, and the prices were being pushed on the downside like that. And after that, this is the accumulation phase, and then the prices have started moving on the upper side after the formation of this range. A good amount of breakout that happened on Thursday. Basically, the data was really important today that we had already discussed in a previous stream because we had GDP coming for the United States, unemployment claims, durable goods. There's a lot of data that was coming out, and we had discussed that we're gonna see something significant happening. So we did had a clue that what kind of significance would have been there. So right here we can see the breakout has happened, and now there are two scenarios, guys. Literally, because number one scenario is that either our price gonna pull back and continue in the direction like that on the upper side. On the other hand, the scenario is that there could be a chance that on this double top right here, which is less likelihood that we can see a reversal like that and then continuation further. So these are the two chances. Most probably, like what I believe is this scenario gonna work. I think so that dollar can strengthen up. Just a sec, guys. So USD CAD. So guys, USD CAD. The dollar was looking quite strengthful on the previous days. It was looking quite strengthful. This trade was executed, got stopped out around here. But the thing is that the reason for this trade entry was more on the technical side rather than on a fundamental side. That kind of impacted this stop loss to hit, in a sense that what ended up happening, that you can see here, we had on this candle we had like a Trump's peak, and you can see that the price went down again, made a base, and then pushed out on the further side, gave us a good amount of rejection around this point, kind of like trapped, traded around here, and then broke out of this point. But the reason of the breakout was more on the data side. Secondly, the market has been on an upper trend like that, and you can see it. It was an uptrend, and I believe that execution was wrong in there, and that's why like the stop loss got hit in that scenario. But let's see how things actually further reacts. Then we have AUD CHF. We can see that the lows are actually intact, and price came back, formed a breakout move from this point, and went up. Didn't give much chance to re-enter or something like that. But overall, right now the prices are holding around here. So most likelihood that price can move up like that. Similarly, guys, AUD JPY, USD JPY, right now in the range, couldn't show much specifically when it comes to JPY. JPY is getting super strength, and right here you can see continuation of the swings and moving on the downside. Let's see how the things react around here. Most probably, guys, like I believe dollar can take the chance to move on the upper side like that. Euro USD has given us a good downside move today, a really big move, around about, let's see, around about like 80 pips, 83 pips on the first candle of the 4 hour time frame. And let's see, guys, that if the prices reach to this point, we can expect a continuation, otherwise like a small range, and if the breakout happens, we can expect that. And Let's see if the range actually forms, because it's like a literally a falling knife right now. And Euro GBP has also in a cell structure from this point. There was a range that was formed in this continuation pattern that is happening. Really an amazing opportunity. Euro odd. So guys, you can see that Aussie is super weak right now, because this kind of like move is like not normal. You can see right here it's like a straight move on the upside. That's really amazing in a sense. So might continue further on the upper side. Similarly, Euro NZD has been like a super. NZD is also weak like you Aussie. So guys, just remember that Aussie and NZD are a bit weaker than other pairs right now. So it is even like pushing directly out of this point, and this last for a candle today has given us a good breakout in the early session. CAD has been also a really a weak pair right now, but you can see from this point. So right now the prices are pulling inside, might continue like that further, because we do have like a Canadian dollar data that is coming tomorrow about GDP is of the Canadian dollar is coming out, and it seems to be positive. So we might get we might get a double top around here, and the prices then can push on the downside. Most likelihood that would be the scenario, and let's see if we can actually get something. So in that case, I believe that the double top can be a really good opportunity right here around this level. I believe that in the London session things can pump up, but if the data aligns and GDP of the CAD Canadian dollar gets fine, we can actually execute based on that. So in that case, I'm really interested in Euro CAD. If I can get this type of setup out here, something like that, and failed, then we can actually execute. But there would be a really less time to specifically execute, because tomorrow is Friday. Today is Friday. Euro JPY, you can see that yens are super strong, continuously like range and then break out on the downside. Most likelihood is that it can further go on the downside like that. Similarly, Swiss quite strong, pushing the euros on the downside after making this swing right here. Pushing the dollar or euro really downside. It's like on the support right now. One touch, two touch, and now third time might break out and move on the downside right here. Could give a potential opportunity, guys, from the sell side. And GBP USD, see, it's like literally a falling wedge right now. Thing is that this could be an early stance for the downtrend if things look right. Data aligns. So GBP Aussie, you see the rise and an abnormal rise, and GBP NZD has broken our main level as well. This is mostly on the weekly level, and you see that this level has been broken. And right now the prices are here on another weekly level above here, quite significant right now, by the way. But there is a lot of other things that need to be checked. GBP CAD has given us a good double top right here. Price is pushed up, came back, failing to break on the upper side, and now coming back. So if the prices enter into this range, we do have a clear zone around here. This could be another potential opportunity. I believe that GBP CAD is showing much more weakness than Euro, and right here GBP JPY couldn't break much further. GBP CHF has been breaking, but on Euro side it was breaking more. And this is Aussie giving us a big move today, by the way. Big move around about 90 pips in here. So this is another trade not going right because Aussies were super weak till the afternoon when I was looking at the market at that moment. So the thing is that we need to actually, the idea behind the trade was this. The price were pushing on the downside. Prices started going into the range, moved back up. It's like head and shoulder that is forming around here, and I got executed around there in order to like continue towards the downside. But Aussie started getting energy or getting bullish more faster than the NZD. Although the NZD is, by the way, weak, and Aussie is also weak. Both are weak right now. But compared to like Aussie's, NZD was less weak at that moment, and we can see now it's opposite. Now Aussie is less weak, NZD is more weak. Sorry, Aussie is less weak, NZD is more weak, and we can see a shift in the market on the upper side. So this is the thing, as a trader we actually face that the dimensions actually reverses on the macroeconomic side, and then it actually impacts our trades on the individual side. So this trade has been executed right now, but not looking great. If we further break this trade down, I was basically targeting the measured move on the downside like that, but now I believe that I should be targeting this move on the upper side like that. So let's see how things run. Most probably, like the way the prices are pushing on the upper side might stop me out. See how weak AUD is in front of Canadian dollar, and overall AUD is weak, and we can expect a good move on the downside. I was really expecting a good amount of sell off that actually happened. See right here, previous days I was expecting a move on the downside. So it's just the timing that sometimes not aligned perfectly. And you see on the yens specifically really defeated the Aussies and dumping the Aussies in front of yen. And a similar structure here, a great pullback around here, squeezing the buyers up here and trapping them, and then moving on the downside here, reaching all about here. So it's just like a small candle being developed just like for a profit taking right now. The move has already happened. Similarly, NZD, really weak now. It wasn't that weak in the afternoon, but all of the sudden it became more weaker. Right here, you can see it became really weak. And Aussies as well, and kind of like pushing on the downside really hard from this point. I was just like wanted to like see this analysis could have worked or not, but see it actually actually broke further on the downside and showing the weakness. Any sort of pullback can give us a continuation move, and it's fine. This trade wasn't executed, but the thing is, we can actually see that how the prices are actually reversing on this downside. NZD this trade has been it was executed around this point, exact trade, and the breakdown that happened further really astonished me right now. And but I was able to like lock in the profits around here. So see, this was my stop loss up that I actually trailed. So looks really weak right now, NZD as well. So CAD JPY, no, sorry, CAD JPY, yeah. So Canadian dollar was weak around here, gave us this move. After this move, you can see that prices pumped up, took all the liquidity around here, and then started dumping on the downside, and can further continue like that because yens are quite strong right now. And similarly, CAD CHF, CHF has been a good strength full pair around here, pushing the prices on the downside. And CHF JPY, we couldn't see much of the volatility around this pair. The reason is like both are considered to be safe pairs as a safe havens right here. So look really significant. And then again back to DXY right now. So guys, this is a general analysis that we actually saw, and really happy with the moves that happened this week. A little bit complicated because of the data, but overall it's good. Take care, guys.